Charlie Munger is best known as the longtime business partner of Warren Buffett and is the vice chairman of Berkshire Hathaway. He's also a highly respected investor in his own right, with a philosophy that emphasizes the importance of understanding and applying fundamental principles to investing. Munger is a strong advocate for diversification and the value of learning from a variety of disciplines. He's also a firm believer in the power of compound interest and the importance of patience in investing, which makes it no surprise that Charlie Munger loves dividend stocks. In this video, we're going to be looking at the top 3 dividend stocks in the Daily Journal, which is the investment portfolio managed by Munger. If you'd like to download the spreadsheets used to analyze these stocks, then you can head over to my Patreon page at the link in the description. The first and the largest holding in the Daily Journal Corporation stock holdings is Bank of America, stock ticker BAC, currently trading at $35.25 per share. In that fund, they own over 2.3 million shares of Bank of America, which is over $80 million in value. Now, we can see over the past year, Bank of America is down about 27.89%, and over the past month, they've gone up about 5.46%. So let's go ahead and jump into my stock valuation spreadsheet. Come over here and plug in the stock ticker for Bank of America and hit enter. And like always, all of this data will automatically load in. We can see we're looking at a 1,000-day chart. We've seen a pretty large decline over the past year in their share price. If we come over here and look at the dividend data, we can see they're paying out 88 cents per share, which currently gives them a dividend yield of right at 2.5% with a nice low payout ratio of just 26.8. If we come down here, we can see analysts currently have a target price of $40.56 per share, but the beta is around 1.39, so you typically do see a little more volatility with this stock. Let's go ahead and jump over to our first valuation, which is going to be Graham's valuation. I'll zoom in right here and come over, and we can see the formula Benjamin Graham laid out for us to calculate intrinsic value. So we're going to plug in these variables like earnings per share, our growth rate projection, the average yield of AAA corporate bonds. Once we've done all of that, we divide by Y, which is the current yield on AAA corporate bonds at the time of this video. That is sitting at 4.46, and we come out to an intrinsic value of $40.53 per share, which, like we just mentioned, is very close to what analysts currently have as their target price. Now let's go ahead and jump over to our historical price to tangible book value right here. And essentially what we're doing is we're plugging in the stock price over the past decade and looking at the tangible book value per share. And what this does is it gives us our historical price to tangible book value over that time. Now, at its current price and current tangible book value per share, we can see the current price to TBV is sitting at 1.65. And if we look at the historical data, we can see that'd be around right here, which kind of is in line where it's been over the past 5 or 6 years, maybe an indicator that it's currently trading at fair value. Now, jumping over to our multiples valuation, what we're going to do is we're going to take companies that are similar in structure to Bank of America and see how the market is currently valuing them using a price to earnings multiple. So we're taking companies like JP Morgan and Wells Fargo, taking their stock price, dividing by the earnings per share to get that price to earnings multiple. We then take the average price to earnings multiple, multiply it by Bank of America's earnings per share to come to an intrinsic value of $37.22 per share. Now, anytime we perform a multiples valuation with a bank-like stock, I typically like to look at an ROA analysis and just make sure that the ROAs are relatively similar. And we can see for Bank of America, it is slightly lower than their competitors, which means you could argue that it may be fair that Bank of America trades at a slightly lower average price to earnings multiple. Now, the last valuation that we are going to look at is the dividend discount model. And essentially what I do is I plug in the quarterly dividend payouts so we can see how much the company pays out each year, and we can see our year-over-year dividend growth rates for Bank of America. Over the past few years, they've had an average growth rate of about 10.36. Moving forward, I'm projecting a growth rate of 6.25, discount rate of 8.5, which gives us a dividend discount model price per share of $41.56. So when we jump over to our output tab, we can see all of the valuation models we used. Graham's at 40.53, multiples at 37.22, and dividend discount model at 41.56. And we also came to a current price to tangible book value of 1.65, meaning that it's close to fair value. So that gives us an intrinsic value of $39.77 per share. The current trading price for this company is around $35.24. So let's say you wanted to be aggressive with your investment and apply a 10% margin of safety. Based upon that, your acceptable buy price is $35.79 per share, meaning now is a good time to consider buying. If you're a little more conservative and you apply a 20% margin of safety, your acceptable buy price for this company is around $31.82. Let's go ahead and look at the next holding. The second largest holding for the Daily Journal Corporation is Wells Fargo, stock ticker WFC, currently trading at $44.27 per share. The company owns over 1.5 million shares, which is over $70 million in total value. We can see for Wells Fargo, over the past year, they're down around 21.5%, and over the past month, kind of like Bank of America, they've seen a decent run up. They're up about 1.65%. 1%. But let's go ahead and jump over to our stock valuation spreadsheet. Like always, depending on what we plug in here, we can pull in our data. So we'll plug in WFC for Wells Fargo and all of this will load in. We're currently looking at a 1,000-day change, so we can see a huge run up, a little bit of a drop off, but not as drastic as Bank of America. If we come over here and look at the dividend data, we can see they're currently paying out $1.20 per share, which gives them a decent starting dividend yield for a bank stock of about 2.71% and a nice low payout ratio of just 25.8. If we come down here, we can see analysts currently have a target price of about $53.43. Institutional ownership is decent at around 74.6% and a beta of 1.18, basically meaning we're going to see a little more volatility than normal with this company. Now let's go ahead and jump over to Graham's valuation, and again, we will plug in these variables into our formula laid out to us by Benjamin Graham right here. So we have our earnings per share, our growth rate projections, and our current yield on AAA corporate bonds. Once we plug all of this in, we come to an intrinsic value of $49.38 per share, a little bit higher than that current trading price. Now let's go ahead and jump over to our historical price to tangible book value. Again, I'll zoom out and we can see once I plugged all this data in, the current price to tangible book value is currently sitting at 1.28, which is quite a bit lower than where it has been historically, meaning the company may currently be undervalued, which is a good sign. Now jumping over to our multiples valuation, again, you can see, again, this is a company similar to Bank of America, so we have similar comparables again here. We take the average price to earnings, multiply it by Wells Fargo's earnings per share to come to an intrinsic value of $44.72 per share, which again, pretty close to that current trading price as we can see right here. Glancing at the ROA analysis, these are the same companies we just looked at, so the ROAs are relatively similar. It looks like Wells Fargo is slightly higher than their competitors at this current point. Now jumping over to our dividend discount model, again, the point of this valuation model is we should be able to value a company based on how much it pays out in dividends and how much that dividend is increasing. So once I plugged in these dividend payouts, we can see they've been kind of all over the place with their growth rates recently. That's because they recently had a reduction in their dividend payouts, but they've been increasing it pretty rapidly since then. So the growth rate right here is a little bit messed up due to the fact they saw a huge decline one year. But moving forward, I'm projecting a dividend growth rate of about 6%, a discount rate of 8.5, which gives us a dividend discount model price per share of $50.88. So when we jump over to our output tab, we can see we came to an intrinsic value of about $48.34, and our current price to tangible book value looked like it may be slightly undervalued. So when we apply a 10% margin of safety, we can see our acceptable buy price for this company is around $43.50 per share, meaning it's not quite in that buy range. Let's say we apply a 20% margin of safety. Based upon that, our acceptable buy price is $38.67 per share. Now jumping over to Seeking Alpha, you have to keep in mind, while it's not quite in the buy range right now, if we look at the past year, we can see there has definitely been opportunities to buy in with that margin of safety applied. But let's go ahead and look at our last company. And the third largest dividend paying company owned by the Daily Journal is US Bancorp, stock ticker USB, currently trading at $47.25 per share. They own about 140,000 shares, which is around $6.5 million in value. And we can see over the past year, they're currently down about 25.23%, and over the past month, they're up about 5.29%. Now, if we come over to my stock valuation spreadsheet and plug in the stock ticker, one of the things we definitely need to point out is that starting dividend yield, currently sitting at over 4%, dividend payout of $1.92 with a payout ratio of just 43.9%. So a great starting dividend yield for this company. Analysts currently have a target price of about $52.24. Institutional ownership is sitting at around 74.1%, and the beta is close to 1, so the volatility will be pretty close to that of the market. Now let's go ahead and jump over and look at our first valuation, which is going to be Graham's valuation. And again, we'll go ahead and plug in these variables. One of the things you'll notice is this company does have a slightly lower growth rate projection. Everything else is pretty much the same. We can see our earnings per share, our current yield on AAA corporate bonds, and once we plug all this in, we come to an intrinsic value of $45.47 per share, slightly below that current trading price. Now looking at our historical price to tangible book value, we'll go ahead and zoom out just a little bit here. We can see the current price to tangible book value sitting at about 2.35, which is pretty close to where it has been over the past few years, as we can see right here. Now jumping over to our multiples valuation, we can see the comparable companies we use. The price to earnings for these companies has an average of about 10.91, and if we jump back over to our stock screener, we can see the price to earnings for USB is about 11.27, which is going to lead to a slightly lower intrinsic value. So we come to an intrinsic value of $45.75 per share. And you can actually see this is a little bit reaffirmed when we look at our ROA analysis, because USB does have a slightly lower ROA than these other comparable companies. Now jumping over to our dividend discount model, I'll go ahead and zoom back in a little bit. Again, like always, I plugged in the quarterly dividend payouts so we can see how much they pay out each year. We can see our year-over-year growth rates, which came out to around 6.85% on average. Moving forward, I'm projecting a growth rate of about 3.8, a discount rate of 8.5, which gives us a dividend discount model price per share of $42.40. So when we jump over to our output tab, we'll see all of our valuations, grams at 45, multiples at 45, and dividend discount model at 42, and our current price to tangible book value at 2.35. That gives us an intrinsic value of $44.54 per share, which is a little bit below that current trading price. Let's say we apply a 10% margin of safety based upon that. Our acceptable buy price for this company is about $40.09. If we were to apply a 20% margin of safety, let's go ahead and fix that here. You can see our acceptable buy price would be about $35.63, meaning now is not a time we should consider buying this company. Now, if we jump back over to Seeking Alpha, just like the last company we looked at, we can see there has been opportunities to get in at a decent margin of safety, so you have to keep an eye out for those opportunities. But there you go, those are the 3 largest holdings in the Daily Journal Corporation's dividend portfolio. Go ahead and let me know what you think of these companies down below, if you plan on buying them or if you already own them. If you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. So that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.